9 key points to successful stock market investing. Yes, that's the topic for today. This topic is very, very close to my heart because over several years in stock market and also reading some of the successful investors who have been profitable and successful, I put together some very, very important points which can definitely help you in your journey, no matter what stage of investing journey you are in. Hi, my name is Shivendra Bhatia and I'm a founder of Peaceful Weekend Investing Hub, trying to make investing simple, accessible for busy professionals like you. Without further ado, let's get into the first point. That is, buy low, sell high. What does it mean? You must have read and heard this term. People say you should buy low and sell high, but sad enough, most of the retail investors, they tend to buy high and sell low. And what is low and what is high? Who defines that? It is very important from the retail investing perspective that you need to understand that don't fall in trap of when people tend to buy shares. They buy based on the news flow, they buy based on the information they see on the social media, and that is the first mistake and first trap. Never chase prices. I'll give you one golden tip here. Go and look at these shares, because there will be always, if you go and in Google and search for the companies whichever market you are investing in, whether it's India, Australia, USA, whichever market you are in, if a particular stock is making 52-week high, that is 1 year high, because in 1 year there are 52 weeks, and along with that also making all-time high of that stock, do research those stocks, because there's something fundamental changing. Always tend to buy high and sell higher. One of my mentors said that you should not buy good price, you should buy right price. So it's very, very important. Don't follow the analysts talking on the TV, or don't chase the falling knife. And also at the same time, you should also not look at the price being whether it's a $50 stock or 50 rupees stock or $100 stock or $150. It is about the returns. It is not about the price. I hope it's clear to you. So the golden tip is study the 52-week high and all-time high stocks, because that's where something fundamentally happening. Again, I'm sharing based on my experience, and it is something it's up to you whether you want to adopt that. And I'm by no means saying that I'm a financial advisor, so please do your own research before making the investing decisions. Now, second point, most of the big investors ensure that when they buy a share or company, they own that company. They start thinking like an ownership of the company and get into the shoes of the management of the stock of the company, so that they can understand what their changes of what they're trying to add value, so that can move the stock price. But the retail investors, instead of owning the company, they think they own the stock price, and that is, you should dissociate completely. Linking to price movement is not a correct approach. You should look at the ownership of the company and not get overwhelmed with daily price movements. Focus on long term, and also focus on the company fundamentals, because the price movement is combination of the fundamentals from the long term perspective, what profits the company going to make over coming months in years. At the same time, there's a euphoria in the market, what market participant wants to get. So that is not in our control. What is in control is about reading about the company and associating with the right companies which are trying to have something fundamentally change, and they are able to add value. So as I said, if the company is making all-time high in the first point, and also at the same time it's 52-week high, there are highly chances there's something fundamentally happening. It's a time for you to read about them, because those stocks tend to become a multi-bagger. Again, that's a probability and not a surety. So what I'm sharing with you is based on my experience and what I have been learning with various top investors. Third point is focused based investing. It is, and I was in the same boat many years back when I used to listen to the news or tips. I used to keep buying 100 shares, 500 shares, and just keep on gathering those shares. But I kind of, at the end, I lose focus. And right now what I do is I always follow one share. I keep looking at the stocks in my portfolio, churning them out, and only holding the stocks which are basically in those fundamentally good shares, and keep adding on to that rather than finding new ideas. I don't tend to jump from one stock to another. Instead, I kind of focus. I have focused portfolio of long-term, peaceful weekend investing long-term portfolio. At the same time, I have peaceful weekend investing lab portfolio, where I kind of do all the research, do a lot of reading, and find multi-baggers of future, because I want to make sure that I'm participating in that journey for those new age companies, new tech companies which are coming in, and trying to invest on those based on price action and study them. And important point is avoid FOMO, because people tend to chase prices and thinking that fear of missing out. If you're doing that, completely avoid or stop doing it, because prices tend to come back and you don't want to chase the prices. You'll always get an opportunity in any market. Rather focus on learning, and that's what my fourth point is. Have a long-term view, which is the most important thing. Even though you are doing medium to long term or medium term investing or trading, you should always look at stocks which are from the long term perspective, so that easier for you to have that stocks which are going to be doing well. And it's important to build the right patience, because people tend to become less of patient, because investing is more a game of mindset and the patience rather than actual investing itself. And it's important to give yourself time and be ready to give your investments a time. Always buy quality with decent fundamentals. Very simple tip I give you here is look at the stocks which are highly leveraged. If you are starting in the journey of investing, try and avoid those stocks which are cyclical nature, which are basically go based on cycles like metals, and try and avoid those companies which are too much in debt. Or I would say is the companies which are no debt, you should focus on them, because the chances of them to go bankrupt is pretty much none. Again, there is no surety, but that's something you can follow. Fifth point, make a biggest investment first. And what is that? All the big investors have invested themselves first before start investing into the market. You need to invest in your understanding of the stock market. Make sure you keep learning and learn the basics, learn the advanced, and follow a mentor, so that you can scale through faster and able to learn faster, and based on the experience, practical experience. That has definitely helped me a lot, because when I started off, it was very, very difficult to understand and connect the dots. And as you know, YouTube is an ocean, and it's putting all that together becomes challenging. Sixth point is taking risk. Again, it's um, we all taking risk, whether with our job or whether we're driving. Anywhere we are taking risk, some amount of risk, and stock market is also it has a element of risk. Now question is, do we understand that risk? Like, if you are in a boxing ring, there's definitely nobody can guarantee that you will not get a punch or hit. But most important is when you get up and hit, it should be knockout punch. What does it mean by that? It means that you need to make sure that you invest, and if you just the trade or investment doesn't go in your favor, you need to simply exit without negotiating with that process. People tend to hold on to the stock position even though they're loss making, and they keep on holding on, averaging down. If you're doing that, stop doing it right away. Put some kind of stop loss in place, no matter whether it's long term. And I am not a believer of buy it and forget it and just see it after several years. I'm not of that kind of investor. I tend to do kind of an active investing and review them over the weekend or at least monthly once. And so that's very important. Don't be afraid to cut losses, because it's kind of losses are treat this as a business, because every business has losses, and that's very important. Question is how much less you can minimize your losses. As you cut losses, you will be definitely profitable. That's one key message here I want to give in this point. So let's look at the 7th point. Stock investment should be like a good habit. People tend to come in and out of it, and I used to do that initial part of career where when market is booming, I feel good about it. There's a feel good factor, and then when market is going down, I'll say, okay, I'm not looking at my portfolio at all. If you have been doing that, or I would suggest make sure that it becomes a part of your habit, and make sure that you are improving every day. There's so much of good information out there. Read so many books so that you can build that right mindset in stock market. And that's why you always learn, take action, learn, and that cycle keeps going on for the rest of the life. And that for very reason, I was prompted to create this peaceful weekend investing hub, so that we can all learn together and take action and cycle for the rest of life. And that's very main reason which I kind of prompted, because initial part of career in stock market investing, I also struggled a lot and had to learn, unlearn, take action, then learn. So that kept on going for many years. So yes, make sure that investing becomes a part of your habit. Cut noise. Now, in today's DNA world, where we are surrounded by notification and pop-ups, so becoming more of a pop-up person. And for the last several years, I have not looked at. I've simply cut down all my notification on mobile phone. I've stopped watching any of the media channels, especially the business channels, and make sure I'm away from social media analysts. I do follow few of them because they share good content, so you have to be very specific on whom you want to watch or follow, rather than just following everybody. So you need to cut noises. And I've also I've just gone ahead and enrolled with all the subscriptions which are just taking away my energy, so that way you can be solely focusing on the right things in the stock market investing. Right, you need to get yourself time if you want to make some in your journey of investing. You want to be profitable and also wealthy. All right, so that's one important tip. Last point, I hope so far you're enjoying and you're able to get value out of this. If you are, I would highly recommend to subscribing to my channel, and also hit the notification bell and press the like button, so that it helps in the Google algorithm, and also it reaches out to the right people who are looking for this information. Thank you so much for that. The last point, We have all heard, understand this compounding formula when we in our school days, but how many of them, or how many of us would understand the power of the compounding formula? And you need to see that in action. When you follow all the other points, you will see, when you start compounding, you are in the right stock, and you will have that, will give that compounding formula the time and the growth rate which will help and multiply your money. So make sure, just after understanding, follow those points and give your investments time and runway to compound your wealth. So these are the top 9 points which I wanted to share with you.